The World Gold Council released its gold demand trends for Q3, and it seems there's still interest for the yellow metal, but can this trend continue? Joining us now in studio is Juan Carlos Artigas from the World Gold Council. Juan Carlos, thanks so much for being with us.
Thank you so much for having me again, Nila.
Yeah, well, let's talk about your latest report, which found that gold demand up 8% year over year in Q3. The question is can this trend continue?
Look, I think that when you understand what is happening with the gold market, of course, it's a balance over the long run in demand and supply. We do think that there are good signals over the long run for demand and for the balance of demand and supply in the market. There's interest from consumers, as we saw this time around. In fact, consumer demand is the largest portion of physical gold demand. Alongside technology, they make up almost 65 or so percent of physical demand, between 65 and 70%. So you do have that. You have a lot of interest in Asia. But there has also been interest in Western markets, especially in the back of uncertainty in financial markets.
Well, would you say the main driver behind the uptick in demand was the lower gold price we've seen?
Well, it was a combination of the two, because we did see various aspects coming into play. The pullback in the price of gold did encourage consumers to come to market. So there was an uptick certainly in jewelry and bars and coins, but also later on, as concerns about global stability and financial markets started to trickle in, we also saw investment demand from other sources come into the market, right? So I think that is really a combination of various factors, including the price.
Well, let's look at the supply side now. We're seeing less spending in mining, less exploration going on. When does this start to become beneficial to the gold price if we're seeing, production really slow down here?
Well, overall, you have to understand that the gold market, again, happens to be a byproduct, naturally, of the demand and supply dynamics. So, you cannot necessarily see them in isolation. The reality is that from the supply side, it's not only mine production, it's a combination of mine production and recycling, and that overall has been already fairly constrained. Now, what we expect is that mine production is likely to taper off or, starts to stabilize and potentially start to taper off over the next year or two, as many other analysts also see. So that adds to the fact that recycling has been coming down, mine production is likely to be stable, to start to taper off, and then you do have strong sources of demand, especially from Asian markets.
Okay, so we have a stronger US dollar, but we have weaker currencies abroad. Do you think this will cause central banks to step in here and start buying more gold?
Look, I mean, interestingly enough, central banks this quarter had a very strong performance. It was actually the second strongest net buying that has occurred, which is very consistent with one of the theses that we've been proposing, which is gold is being used as a diversification for reserves. Now, that has been fairly consistent. We also saw, this is not the first time that we've seen the dollar appreciating. The dollar appreciated actually more than 20% sometime over the last year. Before it stabilized. And at the time, there were many who were thinking that gold purchases from central banks were going to slow down, and we didn't necessarily see that. Russia continued to buy and so on. And now we have data more consistently coming as well from China.
Juan Carlos, before I let you go, let me ask you, was there anything that surprised you from the report, something that really stood out for you?
I think that what the report does very well, or what you can focus on, is the fact that gold is a combination of many factors. So sometimes, especially here in the U.S., we tend to focus a lot on U.S. data or U.S. investment, and that is an important part of the market, but it's not the whole market.
Right.
So this report does show you how the whole market is reacting to the interactions between those.
Juan Carlos, thank you so much for stopping by.
Thank you so much for having me, Daniela.
And thanks for watching this edition of the Gold Report. We'll see you tomorrow.